Okay, this is Chapter 10, Video 3. Let's launch. Okay, so in this video, we're going to talk about calculating the deduction for amortization and explain the cost recovery of natural resources and their allowable depreciation methods. And so we're going to talk about amortization. So it's the business cost of to recover intangible assets through amortization. Guys, if you've taken a financial accounting course, which I assume most of you have, or you're in the process of doing, intangible assets is not going to be something you're going to have too much of a complicated asset to get. And the good news is, tax, for the most part, follows a lot of amortization rules. I mean, there's going to be a few things that are going to be talked differently, and we'll talk about this a little bit later. But for the most part, amortization is one of the few places where the IRS kind of said, you know, the way financial accounting does it, it makes a lot of sense. And so we're going to keep up and we're working with that. But businesses, you know, like they said, so intangible assets in the form of capitalization of expenditures, such as capitalized research and experimentation costs, do not have physical characteristics. In other words, you can't touch it, you can't feel it, you can't grab it, you can't do something with it. It is intangible. It does not physically exist. It is a concept. And so whether it's concept of research and experimentation costs, or goodwill, it does not physically exist, and we have to actually write those off over time. And there's going to be section 197 intangibles. I used to hate this because section 179 and 197, you know, I had a minor amount of dyslexia, so I found this to be a very difficult thing to get. But startup expenditures and organization costs are going to be under intangibles that have to be depreciated, R&E costs, and then patents and copyrights that are actually purchased. So 197, I told you, 197 intangibles are basically, they have assets of a recovery period of 180 months, 15 years, regardless of their actual life. So goodwill, you test for impairment under financial accounting, and under tax, you're going to depreciate over 15 years, regardless, no ifs, ands, or buts. There's going to be a full month convention that allows the taxpayer to deduct an entire month's worth of amortization in the year of purchase, or in the month of purchase, and all subsequent months in the year. Organizational expenditure and startup costs. So what happens with these is, these are two separate things. And I know that when we talk about it, organizational and startup, it's kind of like one line. We kind of think it's the same thing. They're very, very different. So what'll happen with startup costs is that those are the costs that you incur when you set up the business. And that covers, you know, from concept all the way to doors open. That's going to be startup costs. And you have to capitalize all that, because the way the IRS looks at it is, look, you started your business, you had to pay these salaries, you had to do all this other stuff in order to get set up. We're not going to let you take an immediate deduction for that, because there's a value to that. If you think about it, you had the startup costs. Without those costs, you wouldn't be able to start the business. And as a result of which, you need to be able to do that. Okay. So businesses, you know, in the form of a corporation or partnership, it will incur organization type costs. So if you go hire a lawyer to get an organizational agreement done, an operating agreement done, you'll get articles of incorporation, things of that nature. Those are going to be costs that you have to amortize over time. Nowadays, with a lot of stuff like LLCs, you can form them with like $100. You're not going to be actually amortizing that over time, because as we talk about with the immediate expensing and how that kind of works out. But basically, you'll get to write off, if it's up to $5,000, you write it off all at once. If it's $5,000 to $50,000, you will actually write off $5,000 and amortize the rest. And then from 50 to 55, you'll actually phase out that initial 5,000, and then you will actually get to where if it's 55,000 or more, you're just going to amortize everything over the appropriate life. Okay, research and experimentation expenditures. Stay competitive. Businesses often invest in activities that will generate innovative processes to improve their products or business processes. Businesses may immediately expense the cost they elect to capitalize and amortize costs using the straight line method over a period of not less than 60 months. Beginning in the month benefits are first derived in their research. So this may be a way. So for example, maybe when they're researching a product, very good example, COVID-19 vaccines, maybe they're going to write it all off immediately, or maybe they're going to say, look, we know we're going to make big bang boom off of this. And so maybe we want to amortize this over a period of time, and do that. Okay. Patents and copyrights is a matter of amortization. It depends on whether they directly purchase it or self-create. Businesses that directly purchase will amortize over the remaining useful life of the amortization. Over the life of the patents or copyrights. Businesses receiving self-created patents amortize the cost of the basis of the self-created intangibles over the shorter of the legal life or the remaining useful life. So if the legal life of a self-created patent is, we'll say 20 years, but you know that in 5 to 10 years, you're probably going to have it, and that's going to be expired because something else will come along. You write off over those 5 to 10 years if that happens. So this is a table that kind of talks a little bit about some of these assets, and I'm going to go ahead and let you read that on your own while you look at my smiling face. And again, smiling face. Okay, depletion. So a method that taxpayers use to recover their capital investment in natural resources. You go buy a mountain in order to pull resources out of it, you're gonna deplete that over time. And usually what will end up happening is that they'll make estimates. They'll hire experts who basically go and they say, okay, in a mountain like this, based on these soil readings that I'm getting and radar that they're doing and other types of stuff, we estimate there's this much gold in there. And so you're going to deplete that over time as you yank the gold out of the ground. So taxpayers must estimate or determine the amount of units. That's how we kind of do that. And again, it's going to be usually used by people with bigger brains than me and in the terms of mining operations. Once the costs are recovered, businesses are not allowed to deduct the use cost of depletion to determine depletion deductions. In other words, if we estimate that there's $10 million worth, we hit $10 million worth and discover that there's another another $1 million worth because of the bad estimate, we don't get to write that off. That's kind of the way it works. The amount of the percentage of natural resources determined by multiplying the gross income from the resources extracted by an activity by a fixed percentage based on the type of natural resource, and that is going to be an exhibit 1016. And there it is, 1016. So that's what you're going to end up doing with it, okay? Here's an example. Scrap Happy purchases a tract of forest land, plans to use to harvest trees. Estimated that the cost contains 30,000 boards of timber feet. Original cost of the property, $75,000, of which $60,000 is allocated to timber, $15,000 to the land. What is the cost depletion per board? And that's where you're going to divide this out. If the company uses 10,000 boards of feet, how much will they expense under the depletion method? And that's going to be $20,000 as calculated there. And that's all I got to say about amortization depletion. I know I kind of blew through that. This is something, unless you get into an area where this is your area of expertise, you're not going to see too much of the depletion. Amortization you'll see periodically over time. And obviously you want to make sure that you understand those rules. Again, I'm glad to have you in class, and I look forward to seeing you at the next video.